Hey everyone, me Kevin here. Chinese stocks, especially stocks that have run up substantially in November, like Xpeng and NIO, up more than double, have been battered recently by fears of possibly being delisted from the US stock market. In fact, all Chinese companies listed here in America are, well, suffering a little bit because of fears that they could all be kicked off the stock market, which would be really bad for share prices. This comes at the same time as NIO and Xpeng today reported a jump in November sales, with sales at NIO up to 5,291 units, which they just broke 5,000 last month, or the month before that is, and Xpeng sales skyrocketing to 4,224 deliveries in November, basically on its way to catch up to NIO's deliveries. Now, obviously, these are a limited amount compared to what Tesla is producing, somewhere closer to 13,000 right now per month. But both of these together are starting to show that they're competitors to Tesla. That is, of course, if the numbers are real. And that's what brings up today's topic. The idea that it is entirely possible Chinese stocks could be delisted from the US stock exchange unless they follow certain new government requirements in the United States, which China is not interested in having their companies follow. So let's talk about what this means, what the heck is actually going on, and what my strategy around all of this is. Let's get into that right after I mentioned that for free stock promotion with Webull ends very soon. I think it ends tomorrow, but I gotta check on the date. But it ends very soon, so if you haven't yet gotten 4 free stocks with Webull, deposit $100, get yourself 4 free stocks. You may as well get life insurance while you're in the links down below as well, which you can sign up for in as little as 5 minutes. All right, so what do we have? Well, we've got a situation where we've got this amazing news, or very good news, on deliveries coming out from NIO and Xpeng. The companies are growing. These companies are growing insanely fast. There's a huge push towards EV right now. That's why we saw this insane EV hype. And it's also why about a week ago, I posted a video saying EV stocks are in a bubble right now because the valuations have entirely escaped fundamentals. It's just up, 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 up and away, and people have just been buying these stocks for the sake of buying them without doing any kind of fundamental research on them. And the problem with that is anytime there's a little bit of panic or concern that comes up in the markets, you end up seeing these stocks sell off. And Xpeng and NIO over the last 2 days have lost 7 to 10% each day. This is conveniently right after I made the video about the EV bubble will pop soon. You can see that on my channel. But anyway, let's go through a little bit of background about what's going on with Congress, what all this delisting talk is about, and then go into what I'm doing. So, in May of this year, the Senate introduced and passed a bill that would require companies in China that are listed in the United States stock market to certify that they are not under the control of a foreign government, or it would require the companies to allow the PCAOB, the Public Company Accounting Oversight Board, to audit the companies to make sure they don't have a bunch of fake Fugazi magic numbers propping up the values of these companies and making Robinhood investors buy them because the stocks are trending on Robinhood, and then all of a sudden all the numbers are fake and oops, crap, that's not good. The PCAOB, think about them as kind of like the Federal Reserve, except for auditing stock companies or companies listed on the stock market. See, the PCAOB isn't a government agency. It's not like the SEC, but it works under the authorization of the SEC. So they're supposed to be this bipartisan, impartial company that just checks to make sure your numbers make sense. And honestly, it's a pretty basic audit compared to the rigorous audits that companies go through in the United States. The main goal is trying to make sure that people aren't handing cash of envelopes to auditors to just say, hey, these numbers over here look the other way. Because that's basically the stuff that was happening at Enron in 2002 and Luckin Coffee in China as recently as 2019, when they faked $320 million in sales. And their stock plummeted after that came out, obviously. People don't like fake numbers. People like reading reports and seeing real numbers. But it also doesn't help that Hindenburg Research, a short seller who exposed Nikola for rolling a truck down a hill, and then Nikola said, yeah, we did roll a truck down a hill, has obviously come to popularity after the Nikola expose. Recently on Monday came out with another expose saying that Kandi, a Chinese manufacturer of electric vehicles that's spelled Kandi, said that 64% of their sales, their EV sales, were actually being made directly to their own subsidiaries. And basically, the allegation is that Kandi is selling cars to itself, saying, look at all the sales we've got, then parking those cars in a warehouse so they can take the subsidies from the Chinese government to keep funding their business, but also defraud investors in the United States have no idea that they're just selling these cars to themselves and parking them in a warehouse. Sure enough, the stock fell 30%, like immediately after these allegations. Of course, Kandi responded saying, well, this report is obviously one that contains numerous errors, misstatements of historical facts, inaccurate conclusions, and superfluous opinions, and said, but don't worry, we'll go through this in detail and dispute this in detail very soon. Which is kind of also what Nikola said, and they basically admitted to what Hindenburg Research alleged. So basically, all this drama about Chinese companies is leading Congress to say, we just need some more oversight. Let's get the accounting agency, the accounting auditing agency, the PCAOB, to just double check some of the math that we're seeing at these companies and some of the reports. Let's open up the books and see what's underneath the hood just to make sure it lines up. The Senate said, hey, we've got a Holding Foreign Companies Accountable Act, and we passed this back in May. That bill goes to the House of Representatives tomorrow. So this is why you've got this insanely volatile week this year, or this week rather, with EVs. Monday, you get a short seller going, Kandi's fabricating 64% of their sales, which do keep in mind the bias. Short seller says, they're fabricating 64% of their sales. They've already got their short positions. Stock falls 30%, they take their profits, and then they move on, whether the allegations are true or not. But the point is, we got a lot of things going on this week. Big short selling hit piece, the Senate passed this bill back in May unanimously. The House of Representatives votes on this tomorrow at 6:30 p.m. Wednesday night, and it's expected to pass. And if it does pass, well, what is that gonna mean? Well, here's the thing. If this bill does pass, and we get the House and the Senate passing this bill, and the president signs it, Chinese companies will not be immediately delisted from the stock exchange, don't worry. Instead, these Chinese companies, assuming the law is signed by Trump, will have 3 years to comply with the audit regulations. 3 freaking years. Like, no wonder the bill passed unanimously. They're giving Chinese companies 3 years to comply. So nothing's gonna happen overnight. It's not like we're gonna wake up Thursday morning and go, oh my gosh, they passed this bill. This could delist Chinese companies. And even though the market might sell off on that news that this bill passes, which is entirely possible, it's entirely possible that these stocks will continue to plummet, especially with how much they ran up lately. It wouldn't surprise me for people to take profits and go, I'm out of here. No problem. I see it as a buying opportunity. I've been waiting for this opportunity to pick up a little bit more shares. We'll talk about that in a moment. But let's look at what China is saying in response to this. Well, China, first, natural defense says, hey, that's not really fair. We don't want to open up the hood because we don't want to reveal all of our trade secrets. But China has already expressed their willingness to negotiate on how these audits are held. See, while Chinese officials obviously criticize the bill, they also in the same vein say, look, there are better ways of resolving the differences that we have between Washington and Beijing over these audit inspections. We don't have to go to the extreme and delist these Chinese companies because that would presumably hurt Chinese companies, but also US investors. That would be bad. And so China's right here. Their response has been relatively reasoned, and my expectation is Congress is actually being pretty reasonable as well by saying, look, you got 3 years to comply, and let's come up with something over the next 3 years. So at the same time as all of this is going on, we got to remember that the Biden administration is very likely to take the throne of the United States here, the presidency, very soon. And we know that the Biden administration is expecting to be much more accommodating to China than Donald Trump is. So while we had a big trade war at the end of 2008 between Trump and China, we're actually not expecting that with Biden and China. We're expecting things to be soothed over a lot more than what we may have seen under Donald Trump. So realistically, if we have 3 years before any potential delisting and 3 years to negotiate something, and we're under a Biden administration, my guess is we've got less than a 3% chance of these companies getting delisted. And that right now, everything's just rah, big scary, big fear. Oh my God, look at Kandi. What if Xpeng and Neo are just like that, which fair, could be. We don't know. We don't have oversight. We're taking those companies at their word, which is kind of like we did with Luckin Coffee. Now, I didn't touch Luckin Coffee, but maybe I got lucky on that. But I will say, there is a reason why I hold less than 1% of my entire stock market portfolio or stock portfolio in Chinese companies. It's because I can't just walk out of this house and drive to a NIO or Xpeng, dealership or store. I got to fly to China to do that. And I don't even speak Mandarin or any language that they speak over there. This explains why 99% of my money is in United States companies. And I was born in Germany, and I don't even invest in German companies. It's too far out of my scope. I like to keep my exposure low. That's the goal. So what's more important here is really focusing on the odds of this whole audit disaster and debacle actually creating these or leading these companies to delist very low. And the reality is, even if, worst case scenario, these companies did delist, what happens? Well, they probably end up listing, they get kicked off the NASDAQ and they get kicked off the New York Stock Exchange, which means they might end up listing on like an OTC exchange, over-the-counter stock market exchange, which the odds are if that happens, it's harder to trade those stocks. Like sometimes they don't show up on Robinhood or some of the, M1 Finance apps. You gotta get these at special, like Fidelity or TD Ameritrade, which have access to these OTC companies. And that's going to reduce volume that's traded at these companies, probably going to lead people to sell out, and you'll end up seeing prices fall at these EV companies substantially if we get to this kind of delisting phase. So it's not good. I mean, your stock value is not going to go to zero, but there's probably going to be some haircut we get with Chinese stocks if we see a delisting, and then even a relisting at like an OTC exchange. On top of that, it's also entirely possible that the companies just end up going private and buying people out for a discounted price on their shares, which is also not ideal, because if you're not listed, you can't trade anymore, and then your only buyer is really the company itself, which basically just helps the company buy part of their ownership back pretty cheaply. So worst case scenario is actually not very good for owning the stocks. Fortunately, it does seem, though, like the worst case scenario is a very small chance in reality of actually happening. I place that chance at about 3% that we see some of this delisting happening. I'm pretty confident that the US and China will find a way to resolve this. In the meantime, I personally think that markets are just overreacting over a relatively small risk. Honestly, the PCAOB is it's a joke compared to, like I mentioned earlier, the more rigorous accounting standards we have for other companies. I mean, this is like bare minimum oversight here. I wouldn't be surprised if China rolls on this or there's some kind of compromise that comes up. Now, I do still believe that EVs are heavily overvalued. We've seen way too much of a ballooning, way too fast, way too much of an escape from fundamentals at these EV companies. So I've recommended not buying these companies, certainly not during the run-up, but until Xpeng and NIO, for example, are under $35 a share, that's where I'm more interested in actually buying these companies. Now, I will nibble buy at these companies, which a nibble buy might be like 2 to 3% of cash, and I'll take 2 to 3% of cash and just go, I'll buy a little bit. Look, you're down 7% today. Okay, I'll buy a little bit at Xpeng and NIO. And their sales numbers went up again substantially in November here, which is great. And you are placing a bet that they're not lying to you. That's what you're doing when you're buying NIO and Xpeng. You're assuming that they are not lying to you and butchering their numbers. If that's true, then hey, maybe these are great buying opportunities. I still think there's a potential that even this week, after the House potentially passes this bill, which I wouldn't be surprised if they do, that we see NIO and Xpeng drop under $35 each. So if you're thinking about buying, maybe just wait and take advantage of some of this volatility. Consider getting back in at some of the more reasonable pricing. My take right now on Tesla, I'd also like to be buying some more Tesla, but I'm going to wait until December 21st, inclusion day on Tesla. I wouldn't be surprised if we get a sell-off in the broader market towards the end of the year, and then I'll be more interested in buying more heavily. I have been nibbling into the market into some really oversold reds in the last couple days. I talk about those in my Stocks and Money and Psychology of Money course. I list all of my trades in there. But I don't want me saying, oh, I'm buying, be confused with I'm going in heavy. Little nibbles, little buy here and there, just a dollar cost average down is great. Yeah, that's my recommendation. That's my thoughts on delisting and sort of the whole debacle and drama that's going on. Hopefully you found this helpful. If it was, consider sharing it. And folks, we'll see you in the next video.